All right. Think it's the time. Thanks everyone who came on time. And um, if you don't know me, I'm Anuj Jain. I lead the TQT student organization. It's pretty new, about 6 months that we started, but it's growing exponentially. Thanks to you all who have been contributing and attending the events. So this time it's little different. We started a new course, which is not offered at UCSD at all. There are some courses which are little similar, but not something that we hope to do here. And that's the inspiration. We are trying to fill the gap here. So Triton Quantitative is advised by Professor Jingbo. One second. All right. Yeah. So mostly this will be taught by like students who are board members in TQT or they are able to contribute. Um, Professor Jingbo would be advising us on material that we internally prepare. So any questions or queries that you have, you should email us. The email probably you have received emails throughout tquant@ucsd.edu. All right, so I'll just go over um, like the aims and other parts of the course. So why a course? The whole aim is the structured way to learn, right? Like we can do workshops, we can do different things, but quant finance is like very broad, and you may not understand if you just like do one or two things in middle. This course we are aiming to um, help you learn in a structured way so that you actually can apply that in your future career. And obviously, this is probably one of the rarest courses that are done or like run by only students. So that's promoting initiatives by at student level. So I'm also like a CSE student representative for UGCOM. So it's like an advising initiative. And then I thought about that. We can have such initiatives done. Finally, I know all of you were a little in dark that what's like the approval process. It's really difficult. Like I have been going through many emails through the department, through the advising, to make this happen. But the thing is that it should go through a three-step process. So the approvals is not like just approved by me. I'm not at all doing that. It's approved by professors, departments, and then the registrar. And then it would eventually show up on your web reg. So if it does not, don't worry about it. It's like only one or two people who can actually see it on web reg right now. So you should just wait. Mostly if you filled out the correct information as I instructed in the emails, the request would be approved. But I don't have exact timeline when it would be approved. Currently, people might still be doing easy requests, so I cannot guarantee what's the date you will see it on the web page. But yeah, start attending classes that we have here from 12 to 1:30. Um, and I think, yeah, let's go on the next. So, aim of the course is, as I said, like you might be taking different parts in fintech that you don't even know about, but you will understand some parts that you can take from here. You might not have been exposed to finance, or some finance students might not be exposed to programming, but that's very correlated when you actually go into industry or research, right? So, the aim is here to understand the concepts through like practice and practice fundamentals of math and computer science. So there would be a lot of math or computer science involved, but it's not that hard to grasp. If even if you're a beginner, we will help you out throughout the way. So uh, that's the syllabus. currently, like we are on the week one, you can see trading terminologies or market making would be today's topic. I may the second would be stock options, if you have heard of that. Um, some classes here, as you can see, might be remote. So week 3, week 6, and probably week 10 is the remote versions. Not just week 10, I guess. Week 10 would be just that the person would be joining remotely, but he's like the director of AI at JB Morgan, so he cannot come from New York all the way here, wasting his time. But he has a very good insight in machine learning for trading. He has his own course, which is very famous. So that would be a very insightful talk for all of you. I may edit some uh, weak content which is not up here right now. That would be like around week 4 to 7. That if I feel that we are lacking on some projects preparation, I may add on that there. But yeah, that's the general overview. Um, Next, assignments and grading. So, as you know, like this is just a PNP class. You don't need to worry much about like getting like very peculiar about grades. The aim here is to learn. So, but I would need you all to come here because uh, it's not worthy to have this recorded, posted, and all that. I would try to do that. I'm currently recording, but it's only for the purpose that people like who cannot just make on like 1 or 2 lectures. So lecture attendance would be recorded, best 8 out of the 10 weeks we are offering. So you have 2 leaves. I don't think we need much more like flexibility. Similarly, because the reason I'm doing lecture attendance is because I want to offer some short quizzes based on what we cover in lecture. It would be like not too long to take, but that would count for most of the grade here. So pre-reading and post-lecture. So pre-reading is something I know like people don't usually like, even myself, but I think it fits the requirement here because when you come to the course and you don't know the terminologies, it might be difficult for you to like follow through. So if you just like read once, I'll give you like an article to read, and that's it, right? It won't take much time. And since you have read it, you can just solve the short quiz in like very short amount of time. So that's the expectation. I will make that due on like 2 a.m. specifically because if you are like overwhelmed with other courses at like you're working till 12 p.m. Okay. All right. So the last thing is project. Obviously, I want people to actually apply what they have learned through some kind of project they can like go out and show. And the best thing that I figured out is alpha, right? And alpha, if you don't know about it, it's like a trading strategy that's like generalized, right? Like you have generalized models that you hear about. That's like a generalized trading strategy that you will just like give it to a trader, he will execute it, and he will make profits, transactions, whatever. So your alpha is something that carries value, right? It's even in companies, it's not shared among the employees. The person who is making alpha, that person and like very top of the ladder executives know about the alpha. No one else can access that. So that is something very valuable if you create it. So that's the primary option. Currently, WorldCont is like a big organization who not only educates you the links to these projects that I'm talking about. So that was the primary option. Alpha, if like there can be many alphas that you can create, but just one acceptable alpha that the platforms has their own test. Like it's not just you make any trading strategy and they will accept. They have their own barriers on like, oh, like this should work on at least this amount of generalizable. So that is required. Is acceptable by the platform. You get the most of the rate there, right? 40% of it. Mhm. I don't know what's and then there would be a leaderboard. I don't manage it. You will see like everyone can see that it's a public leaderboard. So if you're on the like top 50% of the leaderboard, you get extra 5%. If you're in top 25%, you get another 5%. So it's not meant to be very competitive, but it's just for you to like try more and see if you can create like better alpha or like better trading start. Well enough to create, but that is also something uh, that carries value. I will declare grading about that a little later, but it won't be too harsh on like what type of bot you are creating. It's more like, oh, does it actually work in a way that we should expect? Um, Now, lastly, I do think that like the third challenge we have here, the IMC is a trading company, and they have this whole world level biggest challenge of trading. But the problem with that is that it only is like in 2 weeks from now. So like the competition is already in tutorial mode now. It will start after 5 days and it will end in like more like 1 week or so. So you may not be learning too much till that point. So much information available for that. So that's on the link. If anyone cannot access the form, can you tell me? Yeah, you can just scan that QR code. And for both of these projects, or like all of the projects, basically, even in IMC, you can group among yourselves, among the team of four is allowed. So team of four is like the official thing, and I will mostly make groups through Piazza, right? So it would be something that if you want to group with someone, you can. I'm putting no restrictions on it. You can also group with someone who is not in this class. But the thing is, I cannot grade based on who others are there. It's just I'll see the result on what you got eventually. So yeah, you are welcome to like participate in groups among the people here. Um, I have a Piazza, so I will whoever scans this, I will send them the link to Piazza. They can join the Piazza, post about themselves, and share that like you want to opt for a certain competition and then you want to work in a team. So that would be about that. And then, yeah, you can use like AI tools if you need to. I guess not many people already know about quant finance. So I guess it's a good resource to learn here. So I'm not hesitating that. It's totally okay. But not on the quizzes, right? Quizzes are meant for you to like actually read and learn. It's the article is like literally very small. If you like read the content from ChatGPT, it would be much longer than the article itself. So I guess just read the article or lecture itself, and that will do most of it. So yeah, that's the assignments and grading. Any doubts? Yeah. Yeah, so I mostly will ask professors to create some kind of portal, or we can do through Google Forms also. But yeah, I will inform about that like as we go along. So pre-reading is obviously not applicable for this week. I'll just give one quiz for this week, which will be a post lecture. Um, and that might be a little longer than the usual ones because I'm not giving pre-reading. So that's the quizzes part. Any more questions? Okay. All right. So yeah, lastly, like what do we ask for from you? Like literally I have or other people also have worked a lot to like actually create the course or get approvals. So just learn and practice seriously. Like this might be something that you will do even if you're not going into finance sector, anything. There are a lot of things that are valuable if you learn here and you apply it somewhere else, right? So don't think of it as like you are just aiming for fintech, but if you are, then this is it, right? This is the best thing you can do, but otherwise also it is helpful. um, and also secondly that we are also students. I am an undergrad. Most of the people who will be instructing would be undergrad. So we are also taking other courses, so please be mindful that like uh, you can give us the constructive feedback, but do not like criticize in a way that it's harmful to everyone. So yeah, that's it. And then extensions, I don't think you would need much. The things are very short, and you just have to keep up with the timeline. The course is not meant to be graded harshly, so it's just pass, non-pass, and we are not here to fail you. So try to submit whatever you can do best in the timeline. Okay. And lastly, the piazza or wherever we'll have discussions. Please share resources that you get, because we are building this from scratch. It's been just like 6 months, so not everyone or not even ourselves know everything. You might find out something while you are searching, while you are reading. That is very helpful for all people. So I guarantee you that helps everyone in a way that also helps you. This, uh, I would say, initiative is being recognized a lot, that only some of us know. And if you make a lot out of this course, that would help even not only you, but like future people to actually get opportunities here at UCSD for fintech or quant-related opportunities. So yeah, that was about what we asked for. There is a brief chart of the amount of jobs and the industry, how it has grown more towards quant finance from just like banking. So you can see 38% of banks versus 3%. So that's the growth of programming application in finance or modeling or like mathematical. So yeah, I think that was it. So any more questions about like logistical things? Mm. I don't think so. If you get approved, they just directly enroll you. So like there is no point in doing like too easy requests. If for that reason you are getting denied for enrollment, please let us know. Like please just email us that, oh, like I got denied for this, and then we can like figure out what to do after that, right? So that shouldn't be a problem as far as I know. Okay. Yeah, good question. Yeah, I said mostly we'll be doing Piazza and emails would be the best way, but I'm trying to find a good way to like integrate the Canvas here. I don't personally have the access to Canvas, so that's the challenge, but I'll try to create some portal. Yeah. Quizzes is just like maybe multiple choice or integer answer. So if it is correct, then you get the point for it. Yeah. It's more like just 5, 6 questions and you answer it. Yeah. Sorry? Yeah, slides would be available. I'll share all the slides. Maybe even recording if that's required. Mm. Okay. So I think we can start talking about terminologies. I think maybe people would already know it, but it's good to review like what official terms are used. Um, so the bid, the first one here, if you can see, bid is the highest price for which someone is willing to buy something. So that's what you see if you go on like a stock app and you see that, oh, like that's the topmost price that someone is willing to buy something for, right? Offer is the lowest price at which someone is willing to sell something. So mostly offer would be the higher one and bid would be the lower one, right? If it matches, the transaction occurs, right? So that's basic terms that we'll use. Size is the amount of stocks or security that you want to sell. So or trade. So that would be the size. Now, make a market. I will talk about that a little more later in the next slide. So we'll hold on it. Spread is the difference between bid and ask price. So here, if you see the top price is 80 and 81 is the offer price. So bid and offer, if you take the difference, that's the spread. Here it is $1. So I mostly traders care about spread. Um, that's where they make the market. So we'll learn about that. But the spread is very important for traders. Hedging or like just a hedge is a trade or investment to reduce the risk of the investment you are doing, right? So it is more considered like a strategy to invest, right? Um, then paper is the interested parties. I don't think that's used commonly, but yeah, that's the official term. I'm taking that from Acuna Capital. You can see that link here. You can search also on YouTube. You can find that video. A broker is just a person or a company that's like acting as intermediary. So not everyone as currently is very advanced to just like place orders on their mobile and like do transactions themselves. So earlier what used to happen is people would just call a person or company that, oh, I want to sell this amount of shares in this, and then they do it for them, or even sometimes they suggest you to do something. So those were the times where broker was like very, very important in actually trading something. um, Ticker size is increment between one level and next level. So here you can see that we have 81, 80, 79, 76. So I don't see any 80.5, 79.5, something like that. So the minimum amount that you should have a gap uh, in the stock prices that you bid is that tick size. So here I would assume that's $1. Um, it varies for every stock. It's dependent on what they decide, like the company or the broker decides for them. So that's the tick size. Lastly is the queue priority. So what determines which transaction is on the priority? So let's talk about that on next slide. Or maybe just talk here. So whoever bids the highest price, right? That's the default on top. So it's called price time priority. Price time means first you sort by price. The highest price on the bidding side would be on top. And then whoever made that bid earliest would be on the top. So price and then the time. So you can see this person with $81 bid is on top because he made that bid 13 seconds earlier from the second one. And on the bid side, or like um, yeah, on the oh, I think there was no buyer side here, but that's fine. So on the buyer side, it would be reverse. It would be the lowest price on the top, uh, and the earliest time again on the top. So both are price time. It's just that on the buyer side, the highest price is on the top, and on the sell side is the lowest price is on the top. Things pretty intuitive. Any doubts on that? So this was just sorting that you have these bits placed like randomly, and then the system or the broker system or like Nasdaq or the stock exchange you are exchanging on, that will sort this automatically, and that's what you actually see. You don't see what's like going on that side, right? So yeah, that was price time uh, sorting. Now next thing is well, how do I like convey this situation, right? So uh, you don't always talk in terms of charts. Like if you see NYSC here, it's like a trading floor. So it's literally like a room that you go in and you tell that, okay, like I want to sell shares of Apple at this amount, uh, and that would be my quantity. So it's very long to say in that like very crowded area. So there is a short form to say this. So you can read that with me. 50 bid for 100 means I am buying, I'm willing to buy 50 shares or 100 shares for a price of 50. So that's 50 bid for 100. And for selling, you can say, oh, 30 offered at 54. So 30 quantity of shares is offered at 54. So you can see that's like reversed here. Quantity here came second for the bidding, and quantity came first for selling. So that's like a little trick part, but that's how it makes most sense when you actually talk and try to make that transaction happen. So another term is hit the bid. Hit the bid means seller stock to the party at its bid price. So if the seller one here who currently is selling at 54 says, oh, I'm willing to sell at 50. So as you can see, buyer was already ready at 50. So now there's a transaction agreement and you're hitting the bid. So hitting the bid means seller is hitting the price that buyer wants, right? Conversely, if buyer says that, oh, like I am able to jump to 54 and buy that stock at price that you say, that's lifting the offer, right? So that's the two terms. And the way I've uh, like drawn these charts is called market depth. So on the previous page, you saw this price time order. That's the market depth. So you can actually see this. And why it's called market depth is because you see that whole list of transactions that might occur in future, or like people are willing to do that transaction at that specific amount. So the market depth is a very good way to understand how bullish or bearish the market is about certain stock, right? People just analyze market depth and try to figure out, okay, what should I do with the stock? So that's market depth. Any questions? All right. So now, as I skipped earlier, market making, right? So market making is something that most trading or high frequency trading firms make money out of. Um, and market making is something that trader decides how to do. And the basic principle is that a market maker would put two offers at the same time. One is on the buyer side, one is the seller side. So here's our like little mascot Veer, who is a quant from an HFT. He's trying to make the market here. So what he will do is he will say, okay, like the top price that was earlier available to buy for was 50. He'll say, okay, like I want to move on the top, I'll buy at 51. um, and then he also says that, okay, I'm to sell for 53. So what that would do, Hmm, seems like we was successful in making the slide go away. Okay, so now we is putting those two transactions on top. And by doing that, he is expecting the people to be swayed by this bid that he has made. He would optimistically think that, okay, the seller one, who is currently um, at 50, the seller one who is at 51, he wants to sell this by making the transaction with the second person here. So he expects this person who is currently on 54, he wasn't like very comfortable with like price of 50, but he might be with 51, right? So he gets one more dollar if he just wants to sell right now, right? So he expects, or he kind of thinks about swaying the people in certain way that, okay, I will have that seller at 54, do it at 51. And then this buyer who is currently at 50 would say, oh, like someone is on top of me, right? Like this transaction would occur first. So I want to make that happen first. And I can pay $3 more. So he would make the transaction here. So net, what happens is that he will essentially have trading of 100 stocks, and he will make $2 on each, right? Because he bought at 51 and sold at 53 simultaneously. Now the catch here is the term two things. First is simultaneously, it might not happen. Maybe the buyer was swayed, but the seller was not convinced enough. So then you are in a way holding that risk that, okay, like you bought it, but the seller is not convinced yet, or the other way around. So that's a risk involved. The traders tries to minimize these risks. They don't want to hold, they just want to get out of that transaction, making some profit. Okay, so this version is like very optimistic, like they are making $2 on a stock. It might not occur in real time. They generally make like few cents, maybe like 50 cents, whatever is the like tick price, that's the least amount they can make on a stock, and that is generally the case. Also, the second catch is the quantity. So here you can see he bids for 100. This buyer is willing to buy 100 shares for 50, but this seller is not. He just has 30, right? So the transaction would only be for 30 right now. Like he will just make probably 30 into $2, which is 60. And then he has to wait to buy more 70 and then sway other like subsequent people. So it is important not only to bid the price, but also the quantity. So how much people you think would be swayed by doing this, right? So this is market making. Why making? It is in some sense providing the liquidity to have transactions, right? So you can think about this as like a halted position, right? The buyer is like, okay, I won't sell above 50. Oh, I won't buy about 50. And seller is like, I won't sell below 54. So the whole market stops, right? But if this market maker Veer is making this transaction, he kind of moved the market. He made that transaction happen. So the person who was buying is now like satisfied and just holding that stock, and seller now has the money he can invest in some other stock, right? So it kind of made that seller invest in someone else also. That's like a kind of making that they are doing. They are making the transaction happen. That's why it's market making. um any questions about? Yeah. Um, so to execute the transaction, you should be on the highest buyer side, right? Like if you do 49, you would be like below 50, right? So uh, you are not actually swaying this person, right? Because you just want to buy at 49. There's already a person at 50 who is not able to make that transaction happen. So you'll likely not do anything by doing 49. But if you are doing on the top 51, that would make the transaction happen. Similarly, on the sell side, right? If you say 58, like that's not helping anyone. They that might help in future if you're like very sure about that. Okay, like stock is gonna go that way, and then eventually I'll make the market. That can be a position, but currently, if you want to do a market making, usually you want to be on the top on the both sides. Okay. Um. Next. So in general, we just use like I just put a screenshot of Excel sheet or something like that. Usually you don't see that, right? Usually the data is not represented in that way. You can see market depth in your phones whenever you like open a stock exchange app, but the most helpful way is the charts, right? You can see if you're making investment, you don't just look at like market depth. Currently, you want to see like, okay, like how good is this stock uh, in general, right? So there are three type of charts that are mostly used. Line charts that you might already have seen. It's like a simple line that you might draw, which is like closing price of stock. So today, whenever the New York Exchange closes, whatever the closing price is, that's the price we are plotting over time. So that's very simple line charts. But there are certain better charts that gives you a little more insight into what happened, and those are candlesticks and bar charts. So charts came first in Japan, and they are over here on the right. So candlesticks says that, okay, like how much movement occurred in that specific time period, or usually a day, in the stock, right? So there is a opening price, there is a high, there is a low, and there is a closing. So if you see here, in the bottom, you see that this uh, bottom stick says that, oh, this was the lowest price the stock hit on the day. The close price is over here, and the open price is over here. So it is little confusing. Okay, like what would be open and closed? It can be the reverse. So the way to decode that is by color. So if this is in green, that means the stock actually rose up in that day. So the closing price would be on the top, open price would be on the bottom of this rectangle. Highest price is essentially the topmost point of this. So in this chart, if you see this is the green one. So the stock started here, and it rose up eventually to here. So if you try to convert like a candlestick chart to line chart, it's pretty easy. You just like match the points of closing prices. You might you might be doing on the top, right? Like if it is a green one, you will match the top point, and if it is a red one, you'll match with the bottom point. So that's the usual way of doing candlesticks. Second is bar charts. Bar charts is more like American way of doing the candlestick charts, and it just helps you to not worry much about like the coloring coding, although it does. So here it's like open price is represented by like a horizontal line, also closing price, and this can be read in a way that okay, like you're going from left to right, so open would come first and then a close would come here. So you probably don't need coloring coding here sometimes, but it is just good to have to see like what actually is happening over day. But yeah, that's called OHLC in short, the bar itself, because it is open, then high, low, and close. So open, high, low, close. So you're going from like left to right. Um, yeah. Opening price is the morning time price when the market opened, and closing price is the like evening. It may not be because there are times uh, when you have bulk deals or some other stock movements happening overnight. So you may not know what happened, right? Like it just in one like it may open. Terminologies, but like that's helpful to know. So you can read that later also when I share the slides. But in general, the orders that you make, like the transactions that you want to deal in stocks, is not of single type, right? You may place an order like, okay, like you are a very busy person today, you are not going to monitor stocks all the day. So, but you want to sell the stock today, right? So you will do what you'll do is like you'll put order for like one day that I want to sell that stock at this price at this day, and if it does not, it's just automatically cancelled, right? And some orders you want to place like, oh, I don't want to sell partial, right? Like I have 100 stocks, someone is willing to buy 30, I don't want to sell it, I want to sell just 100, right? 100. So that's like deal or no deal, right? So the whole deal or no deal. So those kind of orders there are present, and you can read about that over here. I'll give you like a minute to just read through by yourself. So the one I was talking about is all or none, right? If if it is executed in entirety, that's it. Otherwise, not. Fill or kill is kind of interesting. It's only order for a few seconds. So if it is executed in that time, it works out for the traders. Otherwise, you don't want to trade. So that might be something that traders want if they are like very specific about the timing of ordering. Um, yeah. So that was optional terminologies. So I want you to take out your phones or laptops to do this. Mostly phones, yeah, because I don't have a link here. So this is a very interesting trading game. You have learned about like charts. But first, before beginning, uh, just a few instructions that the moment you click the screen, it would make you buy that stock. Okay. And the moment till you hold that finger, it would hold the stock. And the moment you release, you are selling that stock, right? So no other insights into what's the market depth, what's happening, what's going to happen, what's the past. Oh, you may actually see little past, but not the whole. But that's it. And want to make profit by doing so. So try like different strategies. Try like multiple times gaming that. It's a very short game, but what kind of strategies you use would help you understand what's going on. But if you eventually made good profit, you're a con. So you did some analysis on your own that helped you. So try different strategies. All right, that was awesome. Okay. How much is eventual? Oh wait, 3921. You probably got like some Nvidia share. Like 1 more minute. All right, last round, 20 seconds. Okay. Um, so hopefully like people learned something from, or like what kind of different strategies you like improved on, you thought about, anyone like to share? Yeah. Market depth. So how did you see that? Okay. Okay. Yeah. Buying low, sell high. But when do you know like how long to hold? Okay, let's say you bought low. When do you sell? Because it's obviously going green all the time. When do you sell? Okay. You could tell when it's about to turn down. That's interesting. Um, so yeah, all right. So there is a lot of learnings here. So what you essentially tried is estimating the fair value of a stock, right? Uh, the person who is buying low, he actually knows that this is very low for the stock. And the stock actually values more than this. It's just circumstances that it is low right now, so I want to buy it. And if we want to sell it, it's like, oh, like this is very overvalued, I want to sell this. So you're trying to estimate fair value, and then according to that you're making that decision to buy or sell. So there are different ways to do this. Did you sell immediately after seeing a green? The person here said, okay, I'll probably guessed. I probably guessed right that, oh, like this is the time it will fall down. So that's something that you might not guess, or you may guess, depending on how is your analysis. But how sure about like holding that stock is determining the risk holding capacity you have, right? If you are able to hold the stock for long, you are probably bullish enough to think that, oh, like this would eventually increase. Or you are like very lost, like you have bought it on a some point that like it actually rose humongously and you just can't sell it now. So some traders, what they do is like, okay, we made that mistake, we have to move on, sell it, and then do the transaction next time. So hopefully you'll do a better transaction next time. So that's the risk part. We might cover some of it in week 3. And then a gamer or like Instagram explorer, very active, then connection speeds, right? You would do like, oh, I'm clicking, holding, as well as clicking, I'm selling, clicking, selling. So a good reflection speed is reflective of what is called optimization for the traders, right? So you want to make transaction time as low as possible, right? You want to do that very quickly. As soon as you realize that, okay, I want to buy this, you want to buy that, right? So companies have built their own trading systems. They do not work based on the data you get in your mobile phones. They have it even before you somehow. And they also trade on a very high speed. So when they place an order, it's probably going faster than you. So as I said, the bid order is sorted by price time, right? Obviously, people will bid different prices, but you want to be the first one on that price, right? So the time matters. So that's the optimization part. We'll try to cover that in week 8. So next, um, the intuition you have for the fair value of a stock is your internal fair, or more so called intrinsic value. Um, and then if you did some analysis, right? Like you thought that, okay, like this stock is gonna go up by some means. You did modeling, you did spreadsheet analysis, you applied some machine learning model. Whatever you did, you built some model and predicted the stock, the price of like fair value of a stock, like what it should be, and then you are comparing it to market value. So if you are predicting it with some kind of model, that's called theoretical fair or theoretical value. There are like different models like discounted cash flow. You don't need to worry about that now. But some model you used and you calculated a value, that's theoretical fair value. Um, but the actual market price might not be the same, and that's what you actually want. If the market value is not what you predicted, you will make the transaction accordingly, right? So if your theoretical value is lesser than your market price, you would buy it, right? So that is something you didn't do actually here. You just like analyze the chart, but if you build some model and do a calculation, you'll come up with like a theoretical value. So those are two values. So next thing is your model may not be perfect, right? Your model has its own restrictions. You assumed something. It might not be robust on like all stocks. You don't even knew here like what stock you're trading for, right? So uh, the insights for a human to have like a generalized perfect model is like a very rare event. So let's assume that you have a perfect model that actually can do it, and that's the true value, like that's the true fair value of that stock. But even that might not be the market price, right? The thing which model says might not be the market's actual value. That's because the market goes by sentiments, goes by human emotions. It can have randomness at every single time. So whatever model suggests based on past data might not be the true actual value, even if you have like a very perfect model. um, but if that happens in certain cases, that's called efficient market, right? So if market price is the true value, like we are assuming that you have like a perfect model, then the market is called efficient. Efficient is that you, based on past data, you are able to predict what is the true value the stock should be traded at. So this is called efficient market hypothesis. So generally, you assume that markets are efficient. That is based on past data, uh, or I'm sorry. So in the reverse way, based on the past data, you cannot predict the market. That's the general assumption. So creating an alpha is some trading strategy that will uh, like make you profits unlimited. Because if you have created a perfect model which knows the market value, you can probably according to that make profits at every time, right? So generating such an alpha is impossible according to efficient market hypothesis. A second way to say the same hypothesis is that um, it leaves no room to make excess profits by investing, since everything is already fairly and accurately priced. So whatever you see is the actual price with like considering all accurate data, right? Um, and why markets might be inefficient, as I said, it can be due to information asymmetry. So like some information is different on different websites. Some traders don't know about the very right information. Lack of buyers and sellers. So low liquidity, the stock, as I gave example earlier, the buyer is not willing to buy above 50, the seller is not selling at below 54. The liquidity is just not there. So unless you have a market maker, the transactions are not happening. Even if you predicted the true value to be 52, that's not happening. Why? Because sellers or buyers are not at an agreement. um, and then lastly, high transaction costs or delays, right? The people do not want to make so many transactions to like have have like a agreement on every price, right? They would just stay on it because why would I pay for a transaction, right? Every transaction generally cause some cost. um, so if you want like a very fast equilibrium, like in chemical reactions, the way you have is that, oh, like equilibrium was achieved in like so little time because atoms are moving at this speed or whatever. But market cannot, right? It's dependent on human, also on machines, also on the trading systems you're using. And lastly, human emotion that already talked about. So how efficient is the market? There are like three types generally like loosely used, is that weak form, strong, or like semi-strong form. So weak form is that, okay, like all past information that is available publicly is reflected in market prices. Semi-strong is that those public available information is reflected in current market prices. And strong form is that, okay, like you have insight into all the insider information, like, okay, like this is the meeting going to be happening for like a tech conference. People know about it, everyone knows about it, everyone is trading according to that. So that is a very strong form. Stocks like which are very popular right now might have a strong form, but not others, right? So um, now one thing, the question is like, if we talk about Nvidia, is like P ratio of 75. I'll talk 1 second with the P ratio first. But what form of EMH they might have? People generally know about everything about Nvidia because it's news, right? So you all have like most public information. So at least it is semi-strong. It might be strong form also if you know that, okay, like this is the tech conference they are hosting. So everyone knows about it. So that's like reflective of market immediately, right? So now I'm going to talk about like some ratios that are helpful, specifically P ratio. So P ratio is the indicator that helps you evaluate a stocks, right? So how strong a stock is, you can calculate that by dividing stocks market price by its EPS, and EPS is here in the formula. So net income of the company. So the company is earning some amount of money, and they are giving some dividends. Who here is not familiar with dividends? Just like a raise of hand. So dividends is generally like profit, a part of profit given to its buyers, right? If you bought a stock, so you have like trusted that company in some way, right? That I'm investing in you. So stocks generally give you dividends. That is a small part of profit they have earned on a regular basis. So the income you generated some dividends out of that. So that would impact your net income. So that's where we are subtracting. And end of year common shares outstanding is the amount of shares company is having right now. So that's a simple ratio. We can take an example. So here we have a company A, which has the net income of 7.6 billion. It is not giving any dividends. So, and your weighted common shares, like the amount of shares is about 4 million. So you just divide that and you get a EPS ratio. If some companies giving dividends like this, you have to subtract that and then do the calculation. So first you calculate the EPS and then you divide the market actual price by the EPS, and that helps you understand what's the price to earnings, right? So is it, if the PE ratio is very high, as I said in the slide here, if it is greater than 75, it's too much, right? Like price is 75 times more than what it actually should be, some in some sort of way. So even if it is that, people still trade it, it's fine. But you just have to be known or like cautious about it, that okay, like do you know what's the P ratio of a stock? So that's the kind of insights trader usually use while trading. In the game you played, it wasn't available. You just saw that, okay, this is the graph, I'm going to trade based on that. But something like these kind of ratios helps you give more insights into how strong the stock or a company is. Okay. Questions? Yeah. Yes, it does. It does. So P ratio is like publicly available for every stock at any point of time. You can read about it, but do you read about it when you trade it? Probably not. Like people just do charts and market depth. The people who all like just know about P ratio might go and see it, but not everyone does. So that's where marketing efficiency comes from. You don't know what company you're investing in. Is it more overvalued? Is it undervalued? There can be many cases. Yeah. Hmm. Mhm. Yes. So if a company in general gives you dividends, customer is happy. And that is reflected in the calculation we do. P ratio goes down. So that reflects that, okay, like company is not that overvalued. Why? Because they give dividends also. So like they are, in general, people, if even if it's like a very high P ratio, if people are getting dividends, they are pretty much happy that, oh, like I'm getting something anyway. I don't care if the company is overvalued. So that's a way more to satisfy the customers rather than like reducing the P ratio, right? But yeah, that's probably a consequence. The holders of the stock. So whoever has bought Meta like a month ago, they will set a timeline like, okay, whoever bought in this period, we are giving dividends on that. It's not like you declare it and like, okay, like you can buy now and we are giving dividends. It's like a trusted investment that you made some time ago that they are awarding you for. Okay, so two more ratios. And by the way, this part was taken from the blog post we created a while ago. That was created by Ariman here. Um, and it like helps you understand in like a better way. So I encourage you to learn like through that website, which has our blogs in like the way that you can understand better or easily, right? So it's written by students so that you also know what how students actually understand it, right? So dividend yield is annual dividend payment as a percentage of stocks current market price. So usually the dividends are not like very great, like it would be like 1-2%, few percentages, but that's significant. And price to book ratio is comparing a stock's market value to its like book value. So uh, you can like search about that more if you want to like dive deep into. But the most important ratio is the PE ratio, uh, and it's dependent on EPS. So EPS is also important. So that was ratios. One sec. Okay. Okay, so maybe in the leftover time, I want to go over the projects that I talked about. So I'll go to that website. Mhm. Yeah, all right. So on the link that was in the form that you like filled out for attendance, there was a link to this. And if you go on simulate and then learn, you can see, right, like on the top, the link is simulate/learn/courses. So if you go on that, you would see these like introductory videos. You can watch them. I don't want to like repeat the same content like to be delivered here, but that's like helpful to understand what the portal is like how to use that portal, what kind of programming language you can use I think mostly it is their own like specific programming language called fast expressions. So it's even easier to use than Python. So you have to use that, and you can learn about like what type of uh, language is like, how is the syntax and all that. So I recommend like watching those videos on your like own pace somehow. And if you have doubts, I will like try to discuss more insights on like how to do this later on. But if you do get some good resources that were like helpful in these videos, you can share that to the piazza that we will have. Okay, so I think that's it about this one. The second is IMC Prosperity. So you can just go on that and log in. So that's the portal. It's called Prosperity because you are building an island which becomes prosperous by you making the trade. So um, I encourage to try it, but it's not like something that you would like get in a very like short time. But it's very accessible. Like there is a whole community, Discord community that you can join. You can learn about it, and I encourage you to participate on it. Um, Next week on uh, next Wednesday, April 10th, we will have the World Quant that I talked about here. World Quant's world winner giving us a talk about how he creates alpha, how he thinks about the competition itself. So if you understand like basic principles, it would be helpful for you to ask questions to him, like the challenge that you face while like navigating this thing, right? Mainly it would be more informational from his side, but it is very helpful to understand like on your own first and then him talking about it. So yeah, he as I said, he's like a world level winner. He has a very good insights. It would be at 11 a.m. Because 12 is our class time. We would run our class as usual. We have a topic on it, but I hope people would be able to make it. I will try to record that session and share if you cannot like just cannot attend it. But if you do attend, it would be helpful for you to like ask questions and like whatever insights we share. Like as you can see, I wasn't able to fully record this session today because the screen sharing stopped at some time. So please try to attend that if possible. So that would be our next session. Next session is on based on the topic is options. So options would be a topic at starting at 12 p.m. and from 11 to 12 we'll have session from the winner. His name is Vaibhav from IIT Delhi, Indian Institute of Technology, Delhi. His team won like I guess several rounds, and eventually also won. And yeah, these companies give offers based on your performance also. So like if you perform very well, you're probably like an ambassador or an intern there in their own company. But we are not aiming like just like very competitive level. We want to learn. So that's the best way I have thought to learn because I don't have to evaluate you a lot. The portal evaluates you. The portal gives you the leaderboard. Uh, and they give you resources. What I have to do is like actually help you understand those resources. So I'll try my best to do that. But yeah, that's enough for now. Last thing is if you keep on attending like this course, you'll be our active member, like TQT is active member. So I will give hoodies to whoever becomes an active member after like week 3, because that's the limit we have. And there is some food on the back currently, so you can take that. Please take only one so that everyone can get it. But yeah, thanks for coming.